Peter, I'm sorry we have to go through this whole song and dance again.
Aren't we all?
It's happened again. It's also met with that Moody's downgrading their outlook. At what point does it actually matter for the dollar, especially? At some point, will we say the shutdown drama and the fiscal episode in the U.S. is going to mean the peak of the dollar is in?
Yeah, I think really it depends. If we do get a shutdown, it will be the length of the shutdown, right? Because that basically means a contraction in growth and consequently that we may begin to price in an earlier sort of Fed rate cutting cycle. So it's really the length of any potential government shutdown is the issue. As I remember in 2018, we were shut down for roughly 35 days at the time. And then that obviously brought forward expectations of Fed and then a slightly weaker dollar. So that's kind of where we are this time around. I do find it interesting that Moody's, which has always been the laggard of the rating agencies, is now kind of getting out ahead in front of the pack, trying to call for another downgrade. It is justified, however. We do see political dysfunction, very, I would say, curious, to put it politely, fiscal debt metrics.
Very diplomatic.
Yeah, one has to be these days. And so really, you know, I kind of make the analogy, it's not the debt ceiling, it's the debt, right? We're getting to a situation where, you know, US debt dynamics are being questioned, and that inevitably will put pressure on the dollar, but not for some time yet, I fear.
So where does the pinch point come? Peter, good morning, excuse the alliteration. Because next year is not going to be a year of sobriety and probity, is it? It's an election year. Biden's not going to pull back. They're going to have to print more bonds to pay the interest. So where is the pinch point? How does the market test the fiscal largesse?
Well, we'll have to see what's happening with other currencies for a start and what's happening with other central banks, particularly those that appear to be relatively more solid and you know, more creditworthy. You know, you're quite right. Next year is going to be pretty tricky. You know, governments tend to spend an awful lot of money during election years. And we then have the prospect of Donald Trump being re-elected as president, and you know, he's not going to talk about fiscal probity during his election campaign. No. If anything, we're likely to see you know, further talk about tax cuts and stimulus, etc. So you know, we're in a situation where for at least the next 12 to 18 months, I think we're, you know, any hope of fiscal probity and prudence is really being thrown out the window, I'm afraid.
Manus, I was just thinking you had a good stat today on hedge funds. I don't want to steal it, but to be honest, I actually just can't remember it. What was it? Hedge funds long since
she actually
something?
Designed this chart, to be fair. It's 992. This is how long the market is of dollars.
Yeah.
The longest since 2022.
The
longest since late 2022. That was the stat you were actually looking for.
Thank you, Manus. See, Peter, he saves me every day. This is what Manus does for me. You do have positioning racking up for the dollar. Here you go. There's that chart for hedge funds. At what point do you say it's positioning that's going to move things? Are we long enough that could be the factor?
I would say we're not long enough yet. I had a look at the aggregated IMM data recently, and I think the net long was about $8 billion, which, while long, it's not that long compared to previous instances. And the second point is, well, what's the catalyst for, you know, a material weakening in the dollar? Will we see it from CPI? It's unlikely, I would say, at this point, just given that we're looking at the month-on-month print, roughly 0.3% month-on-month. That's going to keep Mr. Powell and company, you know, pretty elevated vis-a-vis the potential for a last or final rate hike. Personally, we think they're done as far as rate hiking is concerned. But really, were we to see a substantial weakening in CPI, that's in your catalyst for potential weakening.
So what does that mean for dollar yen? They'd breathe a sigh of relief at the Bank of Japan if that was the case, wouldn't they? They go, we got away with that. I mean, we're looking at a 33-year. Yeah. Where were you what was number one in 1990 at this time when we were nearly there? I looked it up. Mariah Carey was number one in 1990. I was in my first job at NatWest Stockbrokers, so we haven't seen dollar yen since then. How relieved will the Bank of Japan be if things roll over in the dollar, Peter?
I think they'd be happier to see a rolling over in the dollar than to have to listen to Mariah Carey again coming into Christmas period.
Nothing's wrong with Mariah. Oh, come on. In this Mariah Carey season, you're going to disparage her?
I know. She's defrosting.
I have it on good authority. Kinsella's been seen at a beach club dancing to other trashy pop tunes around the world.
I'm sure that's a total lie. Vis-a-vis the BOJ, look, I think there's two things. The first is that if we look at what they did 2 weeks ago, they've removed yield curve control control, but effectively they still have a negative deposit rate. They've got ongoing QE in one form or another, and so hence you've seen the yen weakening somewhat. We're getting closer to intervention territory, 152, 153, and so really I think that there's a pretty poor risk reward from being long dollar yen from current levels. It wouldn't be compelling for me at these, certainly at these levels.
All right, Peter, I'm afraid we're going to have to end it there. Honestly, I fear for you this Christmas season if you tire of Mariah Carey. Peter, thanks so much for joining us.
Thank you.
Peter Kinsella there of Union Bancaire Privee.